What's up, guys? Brian Mitchell here from Trade Algo. We had a decent day today. Caught some awesome wins on SPY. Nothing new. Just wanted to go over a brief overview of the market, starting with SPY. This is stuff that I covered earlier in today's live stream. If you guys are part of Trade Algo, um, S&P 500 is still in a daily uptrend. One of the first things that I look at when I open a chart relative to the time frame I'm looking at is what is the trend, right? Are we forming higher highs and higher lows, or are we forming lower lows and lower highs? Just now that I've primed your brain on what to look for, you can see that we're in an uptrend, right? Higher high, higher low, and we kind of grind it higher on lower time frames, higher high, higher low. I said here yesterday when we were here, we're more than likely to defend this higher low if we want to remain in an uptrend. So I told people on yesterday's live stream that taking a long around here is decent as long as you set your stop loss being a daily candle close beneath that 635 and a half-ish level. But the uptrend is pretty clear. Higher high, higher low, higher high, higher low. We came and tested that higher low yesterday, higher high, higher low. And I said, don't be surprised if we go back up. And what did we do today? We kind of chopped in the middle of the day, and then we had a ridiculous push towards the end of the day. Something that I also wanted to cover for the folks that don't have time to join me via the live stream at 10:30 a.m. This comes from back testing and journaling, ladies and gentlemen. You guys can look at the 15-minute candles and see that the market has been doing something very interesting. And I'm going to point it out to you guys because it might help you with your strategy. But let's just say, for instance, we have a 1 day, that's what 1D stands for here in this illustration, support. I'm going to put S for support. Typically what we do when we get to that support is we'll crater really fast towards support, and then we'll go below it. Because typically, the higher the time frame, usually the deeper the liquidity grab, below the support or above the resistance, right? It's actually one of the rules of our technical analysis Bible, which I'm not going to cover. I don't want to make this an extensive video. I'll post the technical analysis Bible in the description as always. But typically, we'll move very, very fast, extremely fast, so much so that it spikes your emotions. Market movers know that this fast drop into support and then past support makes people nervous. It makes them so nervous, in fact, that they're like, I don't know if I could wait the entire day to get back above that support because we move fast towards and then beyond support. And then what do we do on the way back up? It's like slow crawl upwards. And right when you see you're getting traction, oh, back down again. And you're doing something like this. And you're just kind of like, oh, man, I got to cut my trade. And then you cut it right here because you longed right here. It makes perfect sense, though. We buy calls at support and puts at resistance, right? But this is a daily support, right? You have the end of the day. You need to wait until the end of the day. And if this was a 4-hour support, you need to wait until that 4-hour candle closes, right? Whatever amount of time is left on the candle, you got to wait. Why? Because typically, right where you let go, right here, the last 10 or 15 minutes of the market, they'll do something like this. And the move comes at the very, very end, right before the candle closes relative to the time frame you're looking at. Let's take a look at SPY really quick, and you'll see exactly what I mean. So SPY, S&P 500, I just showed that we are in an uptrend on the daily. Let me get rid of this paint tool really quick and go to the hourly time frame. And you can see this is wild, man. Okay, let me show you something before I get there. So typically, the 10 staying above the 10 simple moving average signals bullish continuation. We reclaimed the 10 simple moving average green line today, which is absolutely wild to me. Just that we were kind of we had the drop earlier in the week, then we went up, kind of consolidated, and then pushed on upwards. And you can see that happened literally in the last 30 minutes of the day, right? This is just insane to me how we're just choppy, 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 and then choppy, 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 and then boom. You guys see that? So if you take a call at support here right here, where the 10 simple moving average, they had to make you wait all of this. And then you probably cut somewhere in that point, especially if you're going downwards, right? Because market movers have become experts at messing with your emotions even more in this environment. What do I mean by this environment? A news-based environment where we're waiting for news. They're going to do this nonsense, chop all day, and then the very end, you know, they want to shake you out, and they've become experts at doing that. So just keep that in mind, ladies and gentlemen, that if you're going to long a daily support, you need to be extremely, extremely disciplined to your stop loss, right? And if holding on your stop loss is too difficult because of your size, then it makes logical sense to size down hypothetically, right? Because we can't offer financial advice here. All this is just for educational purposes. By the way, since we are on YouTube, might as well state that nothing of what I show here is financial advice. Everybody should know that I'm not a financial advisor, and nor should any of this be misconstrued or construed as financial advice. This is just to teach a hypothetical way to make money in the market and use proper risk management practices, right? So, want you to point that out to you in the market because that's been happening over and over and over and over. And if you are seeing more red in your account lately, that could be the missing factor or missing link. Now let's go to QQQ, which is a little bit more top heavy with tech than S&P 500. Something that I am looking at for QQQs is the daily sloping trend line that we have here. We're going to get some resistance with these two candles connecting. Once we come up here, I do expect somewhat of a resistance and then consolidation going into FOMC, right? FOMC, I think, is the 17th of this month. I do expect some resistance towards the bottom of that gap, somewhere in the neighborhood of that old all-time high as well at 574.64-ish, 574.64. It could also be a little bit before that at 573.22. I think if we're gonna, move on up inside this kind of range, I think we'll get a brief pause at 57322, which is a 4-hour resistance that we haven't tested yet. Usually the first test of a resistance or a support is typically the strongest bounce or rejection. So we are going to get somewhat of a rejection at 57322. I would say that'd be more of a scalp, right? A scalp, an in and out play. So something to mark on your charts, but when we get closer to the 574.5 level, that's where I'm going to start expecting a little bit more of a pullback like you see here, these 3 days right here. So very similar to, let me go to the 15-minute time frame to SPY. I mean, Qs and S&P 500 typically follow each other to almost to the T, right? So chop, chop, and then pop at the end of the day. It's getting very difficult to hold positions. So a lot of people are always wondering, where are the swing trades? Where are the swing trades? It's become more difficult to swing in this market and this environment, ladies and gentlemen. So we want to see a little bit more of sure shots, in other words. And that's difficult when we are waiting. I think the biggest narrative that people are focused on, first it was the tariffs back in April, May. Then it was war. And is there going to be a war? Is there going to be a war? World War III, World War III. Now it's interest rate cuts. Is he going to cut rates? It's priced in. Is it still going to cut? Is it 25 points? The betting market says it's 91% chance, and now it's the interest rate cuts. And then there's going to be another narrative that's going to keep us choppy until we look behind curtain number one and see, oh, it's exactly what we thought it was. We chopped all the way into that event for what? So that's just the market we're in. We're in a news-based market where the market is in high anticipation of news that it pretty much already knows what it's going to do. We all pretty much know that an interest rate is coming. If an interest rate does not cut the way that Jerome Powell alluded to in Jackson Hole, say goodbye to the market. It's going to dip a good 10-15%, and it's going to be mayhem. Might be a good buying opportunity. Hopefully we go into the fear and greed index somewhere back in the fear level, or I'll be scooping up what everyone else is selling, especially the weekends. So either way, we have a plan for the market. And IWM, same thing. I mean, all the indexes pretty much followed each other today. Something that I do want to point out with IWM going into tomorrow, if we just connect this, we can see that we're kind of in a little bit of a bullish wedge. I would love to come down for a little bit of a retest, something like this, ladies and gentlemen. And of course, if you guys are in the day trade with Brian chat, we will play that for sure. So it's a breakout. A retest would be awesome right at that weekly bullish fair value gap, and then right where that point intersects. You're always looking for where multiple supports intersect, like a cobweb. So we have the top of that pattern on the 15-minute time frame. We have yet today's low, which is going to be yesterday's low. We're going to have the top of that weekly bullish fair value gap, and even if we get down to 232-ish, I mean, there's a lot of confluence there. More confluence, more confidence. So confidence has nothing to do with your emotions. A lot of people trade with their emotions, and that's likely why they lose money. I understand why 95% of traders fail, but it's easily avoidable if you remember to stick to a plan and look for multiple supports to make your trades, multiple resistances for your puts to make trades, right? Taking a look at Bitcoin and Ethereum is how I'm going to wrap up this video. Bitcoin actually broke through. I know it's a little bit messy. Don't mind the chart so much. I'll point out exactly what I would like to show you. Here's the apex right here that we had connected to this candle. You can see that we rejected right there, rejected again, but now we closed above it today. So if we come back down and get a retest somewhere around the 109 level, that's where I will long. Almost exactly what we just covered on IWM, the Russell. With the 15-minute time frame, this is the daily time frame for Bitcoin. So there is stuff in the works for crypto for Trade Algo. So for those of you that like crypto as much as I do, I'm a crypto fanatic. So I'm going to be watching this one pretty closely. I'll probably start layering in somewhere around 109,600, go a little bit heavier around 109. And hey, if we even get 107,300, I'll go heavy. I'll go pretty heavy. And that's, again, this is all based on technical analysis, which is automation. If emotion enters the market because of some unknown event like war or tariffs or something, say goodbye to your technicals. People, unfortunately, enter trades just completely forgetting that emotion will always override, always supersede technicals, always beat the crap out of technicals every day of the week and twice on Sunday. So all this is hypothetical, assuming no emotion enters the market. So emotion will just destroy whatever plan you had. I usually get out. As soon as I see some news drop the tape, whether it's positive or negative, I take my gains and run, or just cut my losses and say, I'm going to wait out until the emotion fades, right? So hypothetically, 109,600 and 109 are levels to long here on Bitcoin. It's just been really choppy. Looking on the 1 hour time frame, you can see that it's the same thing. We're in a pop and shop market. The crypto market is becoming very much like stock market 2.0. You can see here on the left-hand side of the screen where I'm going to start drawing. This is an arrow. Pop, chop, 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 drop, pop, chop, 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 pop, chop, 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 chop. And the market is pretty much just drop, chop, pop, chop, drop, chop, drop, chop. The market looks like this, very blocky, very, very wonky. And it's not, again, this makes it extraordinarily difficult for swing trades, ladies and gentlemen. Why? Because swing trades require momentum and continuation. They require trends that look like this: higher highs, higher lows, higher highs, maybe a little bit of consolidation moving sideways, maybe some candles that look like a barcode, right? But then ultimately higher highs. Then we come back and test that consolidation, perhaps, make sure we don't get a higher low. We might even get a nasty wick below, hold it by the end of the day, and then higher highs, higher lows, higher highs. But ultimately, it looks like this, like a wave, not like this. The market is becoming, that's why I want to show you guys the visual so that you guys say, where are the trades? I get it. I understand 100%. But at the same token, definitely don't want any of you guys losing money. I treat all of you guys like your family. Like I wouldn't want my uncle or my cousin or anyone dear to me to lose money. So that is the mindset that I operate from. And then lastly, Ethereum. Very similar. It had an awesome run last, a couple weeks, and now it's just totally flat. I mean, this is a daily chart, just like Bitcoin. We are sideways for 1, 2, 3, 4, 5, 6 days, just 1 week of just barcode. I often tell subscribers I don't trade barcodes. If the price action is sideways, it's not good for calls. It's not good for puts. It's not good for longs. It's not good for shorts unless you're scalping the lower time frames and you just gotta scratch that FOMO itch, the fear of missing out itch. Go for it with small amounts if that's tickles your fancy. But personally, I just like waiting it out. I like waiting for volume to return in the market, and if that's what it takes to wait until FOMC, of course we're going to make trades between now and then. But erring on the side of caution if you're a new trader and you're swing trading because your job, I can't stay to the computer all day. I can't even attend the first hour of the day where all the juicy trades are before taking off to work, whatever it is. My kids keep my hands full. I work night shifts and I'm exhausted by the time the market opens, whatever it is. You want, again, continuation. You want the market to not be looking like this. Sideways, sideways, sideways is just not good for markets. Sometimes it's in our best interest to wait until we have confirmation. Breakouts above resistance, candle closes above resistance, candle closes below support to confirm a downtrend. It could be any number of things, guys. Now, if you guys, obviously you guys know, but if you guys are part of Trade Algo, Brian at tradealgo.com is where you guys can reach me. If not, and you are not part of Trade Algo, we'd love to have you on board, and just like the video, comment. The description is going to have the Technical Analysis Bible, which is this document that I do read every single day. TA Bible is going to be in the description of this video. So look right underneath the video where it says description, and then you shall see the link that I'm going to post so that you can read this every day with me. Buy calls at support, puts at resistance, ideally with confluence. That should be everyone's number one rule. But hey, I'm just here as a guide, not offering financial advice. I just want to see you succeed. Alrighty? All right, guys, I'm looking forward to tomorrow. Thursdays and Fridays are typically my best days in the market. Statistically, that's what my journal shows me. It's basically I do well with the nearer the expiration, I crush it. So that's just the way my style works with day trading. So hope to see you guys tomorrow in the morning. Have a wonderful and blessed evening, and I'll see you guys in the next one. Everyone take care.